1 trillion market cap, capital T, as Bitcoin blazes past $55,000. Another milestone-setting day on All About Bitcoin. As we dive into all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee, and checking in on our favorite orange coin, coming down from a record high of about 55,707. It's still over $55,000 there. You see about trading up almost 7% over the past 7 hours on a record-breaking trajectory, according to TradeBlock, the XBX Bitcoin price. Now, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. So let's just dive right into it, shall we? Joining me to discuss is our Week in Review panel, CoinDesk Managing Editor of Technology Christy Harkin in Toronto, First Mover Editor Brad Cowan in Austin, and CoinDesk Director of Data and Indexes Galen Moore in Boston. Welcome, everyone. It's an incredible day, another incredible week for Bitcoin, 1 trillion market cap. Can you believe it?
When will it stop?
Seriously. Well, the price is continuing to explode into uncharted territory. Just on Wednesday, seems like a year ago, but Bitcoin passed the $50,000 psychological barrier. Brad, start us off here on the significance of these BTC milestones.
Well, just starting with $1 trillion, it's a lot of money. I remember when I a previous job, an editor-in-chief, was reading a lot of stories, and he made the comment on stories. There's a lot of B's, there's a lot of billions you're seeing on stories these days, and nowadays the trillion is kind of the new billion. And so it's a number that's going to get a lot of people's attention. It's like people think about the Federal Reserve's balance sheet expansion in terms of trillions. People think about the national debt in terms of trillions of dollars. People think about other asset classes in terms of trillions of dollars. And now Bitcoin can be thought of in terms of trillions of dollars.
Incredible. I wonder, Brad, has BTC gone from a magic internet money meme to an institutional grade investment asset now?
Yes. I mean, that's kind of the story in 2020, when institutional investors started to embrace Bitcoin for real for the first time. You started to see smart money, big smart money getting into this space. And you've just seen more and more of that over the past couple months. And a lot of people say that's what's driving the price up now.
Right. We also heard U.S. Treasury Secretary Janet Yellen pushing the Biden administration's proposal for $1.9 trillion stimulus. MicroStrategy this week announcing it's boosting its Bitcoin stash again, and money manager BlackRock is dabbling into cryptocurrency. And North America's first Bitcoin ETF reportedly trading $165 million in volume on its first day. Other big news this week was that Coinbase brokered Tesla's $1.5 billion Bitcoin purchase, and their valuation is $77 billion in the NASDAQ private market. Galen, so much bullish activity. What are your thoughts?
So I think, first of all, on the Tesla Bitcoin buy, that was definitely a catalytic moment, at least in terms of the events of this week. But you also have to look at, with any of these announcements, right? Michael Saylor, Elon Musk, with the announcement that this company or this individual is buying Bitcoin, who benefits? Does Bitcoin benefit, or does the individual benefit? I might say that Elon Musk and Michael Saylor get more juice out of the announcement that they're buying Bitcoin than Bitcoin gets out of their activity buying it. And I think that's a pretty common thread through a lot of the people who've come out and embraced Bitcoin in the past. But in the past week or two, you've started to see that beginning to change with institutions like Bank of New York Mellon, right, that really don't need to advertise in that way, going out and saying they're going to start supporting Bitcoin for their clients. That's huge. And that reflects the kind of Bitcoin becoming an institutional grade asset. Now, do institutional asset managers take interest And to what extent do they take interest? I think that's a story that is still being told.
Right.
But when it comes to Coinbase's $77 billion valuation, that's really interesting. And I think it comes down to the same reason why you're seeing the interest in the Canadian ETF, Christine, because both of these things these are assets that are, Bitcoin is an asset that's shut out of the public market, right? And there's demand to buy those assets in the public market. So when you look at things like the Bitcoin ETF that was approved in Canada, which by the way is underpinned by the XBX, which is, as we know, CoinDesk's product through its subsidiary TradeBlock. When it comes to products like that, it's showing interest in that. When it comes to the GBTC premium, and when it comes to a $77 billion valuation for an exchange that may or may not go public at some time in the future, that's an indication that people want to have public market access to this kind of to this asset category, and they're getting it through these vehicles. The other thing that's interesting about Coinbase, though, is, think about this, right? If you ask any man, woman, or child on the street in any American city, anywhere today, name a top Wall Street firm. Name a top Wall Street firm. Do you think the first thing that comes out of their mouth is going to be the NYSE, right? Or NASDAQ or ICE? Is it going to be an exchange operator? No, it's going to be a bank. It's going to be JP Morgan or Goldman Sachs or Morgan Stanley, right? But in crypto, the biggest entities, the ones that are best known around the world, and this holds true in America as well as globally, right? Binance, Coinbase, BitMEX, OK, Huobi. These are the entities that people know about, the exchanges that are running in this market. And they're the ones that have come out and seized the kind of revenue narrative and the spirit of it. So what does that say? It says something about the structure, I think, and it says something about the reasons people are participating in these markets.
All right. But on your other point, we are seeing more and more talk of corporations and banks wanting to get into a piece of the action. Earlier, CoinDesk reported that UK trading firm BCB is launching Bitcoin treasury services for crypto-curious CFOs after we saw that after an explosion of corporate interest following Tesla's huge $1.5 billion Bitcoin buy. So the bulls have taken over, but the bears are still showing their claws. JP Morgan released a report that strategist Nicolaus Penagurtoglu came on the show yesterday to talk about, saying Bitcoin at these levels are unsustainable. He basically said retail investors are driving this rally, not institutions. And he said not institutions because investment in the Grayscale Bitcoin Trust, a sort of indicator for institutional interest, is not growing at the same rate as Bitcoin's market cap. He concluded that this is a frothy retail rally that we're seeing right now. And just a disclaimer, note to viewers that Grayscale is owned by our parent company, Digital Currency Group, which is a parent company of CoinDesk. But Galen, so do you agree with JP Morgan's analysis?
I think whether this is a retail-driven or an institutional-driven rally right now is a little bit tough to tell. If you look at metrics like the CME Bitcoin Futures Total Open Interest, that market continues to grow in size. And to my eye, right, reflects the participation of institutional grade or institutional level players. Now, whether that market is being used for speculation or for hedging of long-term Bitcoin positions is an open question. But when you see, again, I'll mention it again, BNY Mellon coming into the market, you have to know that indicates some kind of level of interest from their clients, right? BlackRock talking about Bitcoin. Again, like the signals are there that there's more legitimate and long-term institutional interest in this narrative of Bitcoin as digital gold than there has been in the past. Now, when it comes to the Grayscale Bitcoin Trust, I think that's an interesting kind of wrinkle on the market. It goes back to my point earlier about loophole-ish access to tough to trade assets on public markets, right? So the Grayscale Bitcoin Trust trades on the secondary market as GBTC, and people pay a premium to buy it. Investors pay a premium to buy it as GBTC on the secondary market, right? So for a long time, there's been a thing called the GBTC premium trade, in which institutions buy it primary, right? And then they sell 6 months later after the lockup into the GBTC secondary market, and they make the premium as a markup on their profit on the underlying Bitcoin, right? So that premium has begun to collapse. And that may reflect a lack of interest in the secondary market product, which, by the way, is a mix of retail and institutional buyers. But it may also simply reflect a flood of supply on the other side, as we saw like banner quarters for the Grayscale Bitcoin Trust in Q3 and Q4, in Q2 and Q3 of 2020.
Right. I also want to get to the network side of things, and Christy, you're our tech expert on that. This week, Bitcoin devs met and discussed Taproot activation. Do you have an update on that for us?
Yes, yes. So one of the things, if anyone's been following along with what's been going on with Taproot, is they mostly figured out that yes, we want Taproot. That's done. That's fine. The question has been over the last little while: when are we going to do it, and how are we going to do it? And they seem to have nailed down the when. The when is going to be in July. The how, though, and this is important, the how has not been 100% defined yet. And what devs are probably going to want to do is get a little bit of community input to figure out, do we want to have what's called a user activated soft fork, which is going to sort of add an extra level of compulsion on the miners to actually get around to activating the upgrade, just to make sure they don't just sort of sit back and go, yeah, we'll get around to it. Or do we want to just trust that they're going to do it, not put in this measure, this sort of kind of like a hard measure to be like, yes, you're going to do it, and just trust they're going to do it, and make sure that everything happens in a consensus friendly manner. So what we're hoping to do is at some point get a little more input from the community to see what they think and whether or not they think we need to have this use of activated software.
Always a good update on the network from Christy. All right, we got to go on a break, but coming up, a look at the week ahead and more BTC discussion with our CoinDesk panel. All right, welcome back. And looking ahead to next week, well, we're seeing Bitcoin passing that $1 trillion market cap, $55,000 Bitcoin. Brad, will we see a correction, or will Bitcoin keep skyrocketing ahead?
Anybody, who knows? I'll say what we have seen and what, analysts have said, which is, number one, this $1 trillion mark. Well, first, the $50,000 mark earlier this week was seen maybe as kind of like a psychological ceiling, and Bitcoin blew through that. And then, the $1 trillion market cap was reached at about $53,700. People maybe saw that as another point. Bitcoin has blown through that too. Bitcoin's now like 55,000. So, it pushed past the 1 trillion mark and just kept going. Will it keep skyrocketing? A lot of people say yes. Will it correct? Definitely. It's a question of timing. Just checking my feed, one of my sources was saying
just keeps
that
going.
It could go down to like 52,000 or 51,000 at this point, or kind of the next on the charts levels that people are looking for. So yes, it could keep skyrocketing, and yes, at some point it will correct for sure.
Right. At some point, people want to take profits. Christy, at the same time, as Bitcoin goes up, so are the transaction fees and mining profitability. What can you tell us about that?
Well, the miners are making some money. The profitability on the mining side has definitely gone up. For example, in October, you were looking at like a $10,000 Bitcoin, and an S9, like an older version, was making roughly about $10 a day, spending about $10 a day worth of power. But now they're getting like $25 a day to mine the same amount. Roughly, you're quintupling the amount of money that you can make on the same amount of energy. So yeah, they're doing great. And as a result, we're actually finding more miners are turning back on when the hash rate, like when it goes down, when the profitability goes down. Miners, especially of the old variety, the less efficient miners, they tend to turn off because it's not profitable for them to run. But now we're getting many more miners online, competing to find that next block, and that's good for the network.
Yeah, but it's expensive to trade on the network. Galen, this week the head of Robinhood, Reddit, hedge funds, and Wall Street Bets trader testified before U.S. lawmakers on market manipulation during the whole GameStop trading frenzy. What were the implications of this hearing in terms of how they will impact lawmaker decisions, rules, laws, or regulations in the future, and how could it impact crypto trading?
I think it's a tough one to call. I said in 2020 that we'd see the parties bifurcate on crypto. We'd have one pro and one con, and that turned out to be totally not true. And it's hard to say kind of what the political landscape is shaping up like. I don't think the hearings this week on Robinhood really have a huge impact on actual regulation on the ground on securities. I think the most powerful signals we can look to right now are from the OCC in the U.S., which has cleared a path, right, for banks to move forward in crypto. And I think that's really the most positive progress we've seen so far. And I think maybe we'll see similar moves or some more clarity and additional action from the SEC and CFTC in the future as well.
All right, well, it was certainly an exciting week with the hearing, with Bitcoin's price going crazy and advances in the network. Thank you so much, everyone, for joining us this week. This was our Week in Review panel with CoinDesk Managing Editor of Technology Christy Harkin in Toronto, First Mover Editor Brad Cowan in Austin, and CoinDesk Director of Data and Indexes Galen Moore in Boston. Time now for the chart of the day. This one is a screen grab of the Bloomberg terminal from Twitter user Holger Schatpitz, who goes by the handle Sheldon Sewer. Ooh, hard to pronounce. As he notes, basically, it looks like Bitcoin is eating gold or taking away market share amid calls for more physical spending to boost the U.S. economy. Inflationary fears are boosting Bitcoin, but Wall Street analysts are associating gold's losses with a rise in U.S. Treasury yields, with authorities calling for more stimulus. Yields could continue to rise, keeping gold, a traditional store of value asset, under pressure. All right, that's it for All About Bitcoin. What a week. I'm your host, Christine Lee. We'll do it all over again on Monday at 3 p.m. with special guest Jim Kuna, Senior Vice President of Secure Payments and FinTech at the Federal Reserve Bank of Boston. Also join me Monday morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.